focus on the markets. About 6-7 minutes left for close. Ajay Baga and Dipan Mehta now join in to talk about, the way markets have been today. And Sudarshan Sakhani is also here with us. Dipan, very quickly to you, what do you think was the reason for this kind of sell-off that we've seen? Did you hear cases of, perhaps margin calls or unwinding of pledged shares?
Not really. I think it's more to do with the fundamental aspect, that being that the interest rate scenario has changed. And if you are factoring in further interest rate cuts for the rest of the year, that's not going to come through. At the same time, I think sentiment for India globally has certainly turned negative. And FI flows also, they've turned net sellers. So that also is impacting the markets over here. And I think, the velocity and the volatility with the markets have fallen. Even the most of the optimistic players are, seen on the sidelines at this point of time. And unless, the market stops falling and stabilizes, I don't see fresh incremental flows coming into the markets.
Okay, Ajay Baga is also with us. Ajay, what is the reason for which the market has sold off so much today, and what is the advice that you're giving investors now?
Yeah, Sonia, I would say I would be in agreement with Deepan that it's best to stay on the sidelines. Clearly, the domestic consumption story is looking very weak. The numbers have been very poor for the quarter. Nearly 70% of companies in the top 100 companies are showing deceleration. The guidance is worse than the beginning of the year. So overall situation is grim, and there is no positive catalyst per se. So you have a monetary policy which is throwing up its hands and saying we have done what we could. We have a tight fiscal policy. We heard earlier from Pradeep on the rural economy, how it's got constrained. So overall the domestic consumption story is bad, which is a large part of the GDP. The other three planks that the government could use, one could be private investment. That is not going to come in probably for the next 2 years, given the negative output gap in the economy, given the capacity utilization, which is sub 70%. The third plank could have been exports, that even RBI yesterday came out and said not only value-wise but even volume-wise, we have seen a degrowth from December. And that is really reflected in the negative WPI number as well. Despite such a fall in the commodity complex, we have not really seen a better profit number from India Inc. That speaks volumes. So one shudders that if the commodity price fall had not happened, or if it had gone the other way, you could have seen a lot more red. And then the fourth plank is really the public spending, which is what today we are dependent on. The government has to step in, both on the consumer side by giving some relief to consumers, be it a midway tax cut or some kind of a grant, or some rural reflation by increasing rural wages. The second part is the infrastructure spend from the government. I think those two are going to be the drivers of the economy. The coming year GDP forecasts have been downgraded. RBI is talking of 7.6%. Most brokerages are talking of 7.4 versus a 7.3 for last year. So virtually you're not seeing any growth. And with agriculture expected to be a -5% read year on year, you're looking at a pretty bleak scenario, and the market is overreacting in anticipation of that. So I would say it is overdone, the correction is overdone, but it's merely reflecting what the expectations that have changed. Our earlier expectation was that September, October, you would start seeing some kind of a turnaround coming in with all the good work the government is doing. That has got probably postponed by 6 months more. And now we are looking at next March really as a revival point for the economy.
Okay, so economy to revive only perhaps in March of next year. Dipan, what according to you is fair value for Adani Enterprises after the restructuring?
No, sorry, we're not tracking that group at all, so I wouldn't like to comment on it.
Okay, any thoughts on ITC, because that's gotten hit very hard, Dipan, and we haven't seen it break past the 300 mark in many months now, and today it's almost at those levels.
I think the reasons clearly are on account of the poor performance of the company past couple of quarters or so, and then negative news flow as far as sale of loose cigarettes is concerned also has damaged the sentiment over there. The basic problem with ITC is that they have not been able to grow the non-tobacco businesses, and those still are not contributing in a meaningful manner to the top line, bottom line. So end of the day, it is dependent on the tobacco business to grow its profits, and there we are seeing a lot of pressure on account of higher taxation. So I think a lot of investors who are holding ITC as part of their core holdings, I think maybe having a rethink on that part, and we'll be seeing liquidation of long-term holdings as far as ITC is concerned. Also, in going forward, I think there are very few triggers for investors to look forward to an ITC as well, given that FMCG and hotels and agriculture business is just not picking up at the level that one would have expected them to, and tobacco business will remain under stress. So where is the growth going to come from going forward? So that's the basic problem with ITC at this point of time.
All right, we have less than a minute to close. The good part is that there's been some amount of respite that we saw in the dying moments of trade. So we recovered about 50 odd points from the lows. The Nifty will close around that 8150 odd level, but it will still go down as a very disappointing day of trade. The Sensex has lost about 320 points today. The Nifty has lost almost about 100 odd points. But yes, there was some minor attempt made towards the fag end of trade. In terms of the stocks that go home with big losses, Tata Power is the biggest Nifty loser, down more than 6 odd %. And then you have the oil and gas names like ONGC, Cairn, GAIL that are all down about 3 to 4 odd %. ITC as well, a second straight day of deep cuts over there. So ITC is now down about 8% in just 3 trading sessions. And you have the banking names, so SBI, ICICI Bank, Yes Bank, all down about 1 to 3 odd %. Cement was not too far behind. Ambuja, Grasim, Ultratech too go home with losses of around 2 odd % or so. What went home in the green? The telecom names did well. So there was a sharp spike in late trade in these names. So Idea Cellular up 2%, Bharti up almost about half odd %. And there was some respite seen in the technology names. So Infosys, TCS as well go home with gains of about half odd %. Coal India has been doing relatively well in the last couple of days. So Coal India is up about 1 odd % or so. There was damage in the mid-cap space, but there was recovery as well in late trade, Rima.
Yes, indeed. The mid-cap index ended with a cut of 1.3%, but from the lows, it managed to recover close to about 2 odd %. And even the advanced decline ratio, which at one point of time was 1:10, recovered a bit and closed with one stock in the green for 5 on the losing side. But big cuts seen in JP Associates and IVRCL and HCC, Reliance Power. Adani Group stocks were in focus because today we had the restructuring which took effect. So Adani Enterprises finally settled at a price of about 110. While the other Adani Group stocks were a bit sluggish, particularly Adani Power, which lost close to about 10 odd %. But basically, all your high debt companies got hit. So even something like a Suzlon or, JP Infra, Reliance Infra, Punch Lloyd was also weak. But then even high cash companies like, cash and books companies like Bharti Infratel was under pressure with a cut of about 6.5%. So, big sell-off seen in the mid-cap space. On the gaining side, UPL has been the star. It continues to hit fresh 52-week highs. In fact, so far now in 2015, it's got a rally of 55%. So that stood out. And you had some gains in Gujarat Pipavav, Union Bank, LIC Housing Finance. So these are few stocks which stood out. But on the whole, it's a disappointing session. Second session in a row where the markets have sold off so sharply. So overall, it's not very good. Sudarshan, would you take heart from the fact that we managed to recover a bit from the lows, or not really, at least for the near term?
No, I'm not sure what we should take from the minor recovery. The losses are significantly larger. We don't have to get so unduly worried, because this is a market correction, and these corrections are inevitable. It's very painful, I can appreciate that. But this is the way the markets behave. We are in a year of consolidation, and the correction is not over yet. So we just keep quiet and accept it.
All right, the correction is not over yet.